Hey everybody, my name is Matt and welcome back to Crypto Kings. In today's video, we're going to be talking about exactly what Shiba Inu has been up to, including a brand new pattern which has emerged on the charts. So if you guys are new, make sure to drop a like and subscribe for more daily Shib vids, and let's get right into it, folks. So if you guys have not already seen exactly what Shiba Inu is doing here on the day, you guys can see we are down around 5.5%, which is definitely a little bit unexpected for me. I definitely saw this as having not really gotten below 55. That was my perspective, at least, and it is very possible it could continue to dip if it is not able to rebound after this sort of point here, because what we're really working with is what is, in my opinion, what looks to be a very urgent support line that we have to bounce off of. The market cap has finally sank into the 20s, and the volume here is down a good 35%, which is not particularly great. But when it comes down to the chart, things look a little bit up. So when you guys see, of course, on our chart here, which I'm going to get for you guys here, you guys can see this is essentially what we are working with. So I talked in a previous video about, in my perspective at least, the support line here being right around 34.50 or 35. Now, that still looks to be somewhat true, but it is treading dangerously close to falling below that. So if we are not able to bounce back quickly like we did here on the 3rd, I definitely could see some issues if we fall into the low 50s, high 40s. I definitely do see a totally different charting perspective if that happens. Now, if that doesn't happen, things could still potentially look up because there is a pattern here that I am seeing that does look to be extremely promising. Now, normally, what is considered a head and shoulders pattern is considered to be somewhat bearish. And of course, you have kind of like a head, two shoulders where it got the name from. And essentially, there is sort of like a break-off point which leads to a bearish run. Now, in this instance, what we're working with is actually an inverse. This is an inverse head and shoulders pattern, at least in my opinion. You guys can see here is kind of a strict one, which doesn't really follow quite as well as some of the looser ones, which is something more like this. So this is the inverse head and shoulder pattern here. You guys can see the head is essentially a rounded bottom with two kind of shoulders of consolidation here leading to a breakout. So that is kind of what this looks like. We have this left portion here, which definitely does kind of look like the left shoulder area over here. Then, of course, we have the head, which is right here, the rounding here at the bottom. And then, of course, the other shoulder leading to the ability for a breakout. And that is, of course, this region. So that is essentially what we are getting from this, at least in my personal opinion. There is, I'm sure, a totally different, charting strategy out there. You could come up with something completely different, but in my personal view, I believe this does look to be like an inverse head and shoulders pattern, which is always good. Speaking of things that are always good, guys, check out Webull. Top of the link down below in the description. If you guys get started over there, you guys get 2 free stocks valued up to $2,300. I always do appreciate it, and it's only if you guys use my link. So if you use my link and you guys want to support the channel, I always do appreciate it, and you guys will get a couple of free stocks on the platform. You can trade stocks, crypto, including Shiba Inu, and all that good stuff. Top of the link down below in the description. But when it comes down to it, guys, again, that is kind of the pattern that I am at least seeing here, something along these lines. And this is not particularly bad, considering it typically does lead to a bullish breakout. So that does seem to be what this is doing now. And if we are to be a little bit more, sort of selective, we could also say this looks like a falling wedge. And you guys can see pretty clearly that this kind of looks like it is a falling wedge. Again, it doesn't always fill out the wedge exactly, and that is kind of an issue. A lot of times these don't really fill out the wedge as they're supposed to because no trading is exact. Not all patterns are exactly the same, but you could argue that this short time duration here looks like a falling wedge. Again, a little bit too soon to tell, but I definitely do think that is worth considering and definitely worth arguing. So we do have that possibility here for the near future. What I think is really going to matter is whether or not it's able to bounce off of this 54 line in a way that makes sense. When we check some other indicators here, of course, you guys can see the relative strength index. We are right here near the bottom because we are definitely pushing near what I consider, again, the very bottom level of support for this instance. So we have, really 53.54 seems to be, in my opinion, the lowest it really can go. I don't want it to get much lower than this because obviously if it does, that could lead to a free fall. I definitely do not want that to happen. Also, if we get much lower than this, you guys will see that would kind of lead to a rounded top, which would lead to some bearish movement. This typically means a bearish move, and obviously we do not want this to complete and create that bearish move. And the relative strength index here is basically warning us. It's saying, yeah, we're getting very, very close to what you could consider to be oversold. And we definitely do not want that to happen. So the relative strength index is actually providing some very good information here, because we do not, under any circumstances, want this to be oversold. So we're right here around 31. We have a lot of headroom to move up, a ton actually. So this could go completely bullish here, go all the way up to maybe 60 and still be within the realm of normal for the relative strength index, obviously preventing a lot of volatility and hoping to sustain a run like that. And of course, if we wanted to push the envelope here out of the relative strength index, you go to 65 and still not have all that many issues. So we definitely do have that possibility in play. If we check the Fibonacci retracement, which I always love to do, you guys can see it is going to tell us exactly from the low and the high of the most recent run what we should be looking at. So we have the low here at around 55 and the high of around 59. And essentially, you guys can see it really does fall through a lot of these key layers of support. You guys can see it goes essentially from the 50% line here through this one devastating candle all the way down to far below the 0 line here, of course, headed almost down to the 161% line here, which is definitely not good considering we are losing even more from when this run started. So we're losing some of the progress from when this run started, which, is definitely not good under any circumstances. So we definitely do want to be selective here with how we look at this. Again, you guys can see it does look to have bounced off of this line, which is good, but that doesn't always mean everything. It is possible that we could still just kind of consolidate above the 161.8% line, which is possible. And in that case, it would kind of complete that falling wedge idea, which would definitely not be a bad idea. That is very possible and still could be very bullish for the long run. But the point that makes me uncomfortable is that, again, we are just getting very, very close to what is, in my opinion, the breaking point. We are getting very, very close to falling through. So we want to be very careful. Again, I still believe that this is inherently bullish. It's just that we're getting a little bit close, a little bit dangerously close to what one could consider to be a bit of a breaking point for this. When we check the MACD, which you guys can see here on screen, it is giving us a long string of sells, just essentially the fact that these have not converged yet. These have not crossed over each other, and if they do, that would definitely change, and we would now have a new set of green regions, but it doesn't look as if they're crossed over. They may in the very near future, but it doesn't look to be the case right now. So that being said, guys, I appreciate you all watching the video. Thank you guys so much for being here. Definitely let me know down below in the comments, folks, where do you guys see SHIB in a week from now? Again, I definitely see this as being sort of a breaking point and definitely the option for a bullish move. But again, I can't guarantee anything. Not a financial advisor, just my personal opinion and just my personal analysis. But I do see this inverse head and shoulders as generally being pretty good. And in history, it does kind of have a success. And of course, the volume would increase once we break above that resistance. So this volume would go up dramatically once we go past that resistance. And that's definitely something we could see in the near future. So make sure to check out Webull, drop a like, subscribe for new. Catch you guys on the next one. Peace, folks.